Yes, a very good morning. Right, so let's discuss the MCQs in the MTP for November 19 exams, the series 1, right, mock test paper 1, test series October 19, right, we are discussing the MCQs in that particular paper, right, you can download this mock test paper from the institute website, right, so first 10 questions are the, yes, a multiple choice question, the direct ones, and then after that you have 10 which are the case study based, okay. Right. Yes. Yes. Question number one. Ram is practicing in the field of financial management planning for over 12 years. He has gained expertise in this domain over others. Ratan, a student of the Chartered Accountancy course, is very much impressed with the knowledge of CA Ram. He approached CA Ram to take some guidance on some topics of financial management subject related to his course. CA Ram, on request, decided to spare some time and started private tutorship to Ratan along with some other aspirants for 4 days in a week and for 3 hours in a day. Right, so reminds us of 11.1.1, right, clause 11 part 1 first schedule, engages in any other business or occupation other than the profession of chartered accountancy unless permitted by the council so to engage, and there we have a list of permission granted generally and specific prior permission required in each case, the second list. Right, so private tutorship, general permission. How many hours? Ratan along with some other aspirants for 4 days in a week and 3 hours in a day. Right, so 4 threes are 12 hours in a week. He forgot to take specific permission for such private tutorship from the council. Later on, he came to know that the council has passed a resolution under regulation 190A granting general permission for private tutorship, part-time tutorship under the coaching organization of the institute, and specific permission for part-time or full-time tutorship under any educational institution other than the coaching organization of the institute. So general and specific permission is granted subject to the condition that the direct teaching hours, right, that is one of the clarification after 11.1.1, right, devoted to such activities taken together should not exceed, right, how much in order to able to undertake the attest functions, right, so should not exceed 25 hours a week, 21 hours a week, 25 hours a month and 21 hours a month, right. So this is the knowledge based question, you can't apply your logic over here, right. So what is the correct option? A, should not exceed 25 hours a week. It is given in the clarifications after 11.1.1. Right. Yes, question number 2. Rana and Company LLP is a firm of chartered accountants based out of Delhi NCR. During the financial year 2019, the firm got an intimation for peer review on 1st July. The entire peer review process, including the on-site review, got completed. The peer reviewer did not share any of his observations with Rana and Company as draft and final report was submitted to the firm. So the peer reviewer, he finished the off-site, on-site review, and then before issuing any draft report, he directly issued the final report to the firm. No, we talk about a concept of preliminary report, and then there will be responses to the preliminary report put by the practice unit. Peer reviewer need not share any draft report with the firm if there are no observations. Incorrect. Even the final report is not required to be submitted to the firm. No, it has to be submitted. A copy has to be sent to the firm along with the report to the peer review board. Right. The peer reviewer needs to share the draft report with the firm before finalization. Right. And there are no reports in case of peer review. On completion, a certificate to that effect is issued. Right. So, yes, D is incorrect option. So, which is the correct option? C. Right, peer reviewer needs to share draft report with the firm before finalization. Okay, next one, question number 3. OPE Limited issued a prospectus in respect of an IPO which had the auditor's report on the financial statements for 2019. The issue was fully subscribed. During this year, there was an abnormal rise in the profits of the company for which it was later found on that it was because of manipulated sales in which there was participation of whole-time director and other top officials of the company. On discovery of this fact, the company offered to refund all monies to the subscribers of the shares and sued the auditors for the damages, alleging that the auditors failed to examine and ascertain any satisfactory explanation for steep increase in the rate of profits and the related accounts. The company emphasized that the auditor should have proceeded with suspicion and should not have followed selected verification. The auditors were able to prove that they found internal controls to be satisfactory and did not find any circumstances to arouse suspicion. We know auditor is a watchdog but not a bloodhound. The company was not able to prove that the auditors were negligent in the performance of their duties. Which of the following is correct? Now, what does it say? The whole-time director, he was involved in manipulating the sales of the company. So, if whole-time director has been involved, if management override of controls have taken place, how can internal controls find out such fraud or error? Right, so what is the responsibility of the auditor? The stand of the company was correct in this case. Considering the nature of the work, the auditor should have proceeded with suspicion and should not have followed selected verification. No, auditor is not a bloodhound. Right, the approach of the auditor looks reasonable in the case. The auditor found internal controls to be satisfactory and also did not find any circumstances to arouse suspicion, and hence they performed their procedures on the basis of selected verification. They've pasted the line from here. Right. In the given case, the auditor should have involved various experts along with them to help them on their audit procedures. Prospectus is one area wherein management involves various experts, and hence the auditors should also have done that. In the given case, by not involving the experts, the auditor did not perform their job in a professional manner. If they had involved experts like forensic expert, the manipulation could have been detected. Hence, the auditor should be held liable. They are giving it an altogether different dimension, that management appointed experts, auditor, you should have appointed expert, forensic expert. No. Right. In case of such type of an engagement, the focus is always on the management control. If the controls are found to be effective, then an auditor can never be held liable in respect of any deficiency or misstatement of fraud. Right? Can never be held liable is again not right. Right? So which is the correct option over here? B. Right, the approach of the auditor looks reasonable in this case. Okay, right, coming to question number 4. Rajiv Limited is a listed company having business of production of motion pictures. For the year ended 18, the company wanted to appoint a GST auditor. For the purpose, somebody who is familiar with the business of the company industry was to be preferred for appointment, that is, who would have worked with the company in the past to avoid efforts, duplication in terms of providing the information to get the GST audit completed. The company had following options for the same. Please advise. Right, who can be the GST auditor? Right, chartered accountant or cost accountant, that is the professional qualification. Can the internal auditor be appointed as the GST auditor? Can the internal auditor be appointed? No, the Council of Institute has clarified. Just as an internal auditor cannot be appointed to do the tax audit, he cannot also be appointed to do the GST audit. Right, so internal auditors can be appointed. No, I just told you that internal auditors cannot be appointed to do the GST audit. Both statutory and internal auditors can be jointly appointed for this work. No. Internal, no. Internal auditors along with tax consultants of the company can be appointed for this work. Wherever internal auditor, I am going to say no. Right, and statutory auditors can be appointed for this work. Yes, so statutory auditors, they can do tax audit also, they can do the GST audit also, but not the internal auditors. Okay. Right. CER Limited is a non-banking financial company and have been operating for the last 10 years. Right. The company is duly registered as per the requirements of RBI. The company's assets base have been very strong over the years due to its efficient management function. The company is also planning to get listed, for which required work is going on. For 2019, the company had closed its books and prepared the financial statements for the purpose of statutory audit in a timely manner. The auditors of the company have started their field work. It has been observed by the auditors that the company's various term loans which have been given to various parties have become overdue in terms of installment, including interest for a period of 5 months, overdue for 5 months. As per the auditors, these term loans should be considered by the company for making provision at the rate of 20% of the total outstanding amount. However, the management has considered a provision at the rate of 0.30%. Please advise the auditors and the management regarding this matter, considering the directions which are applicable to this NBFC. Right, so now the asset, the loan which has been given, term loan, that is the advance, is overdue for 5 months. So overdue for more than 90 days. That means it is certainly an NPA. Right, overdue for more than 90 days. Okay, right. And what do we say? Once it becomes an NPA, it comes and sits into the substandard category up to 12 months. NPA for more than 12 months, then it gets further, it goes further into the doubtful category, and then finally the loss asset. Right, if the loss has been identified. Okay, similar to the provisions which we have for the banks. Right, so here more than 5 months, so it is not more than 12 months, so it's going to be under the substandard category. For substandard category, what is the rate of provision? 10%. Right, so provision should be made at 10%. Okay, auditor is saying what? 20%. Substandard is the doubtful category rate. What is management saying? Standard category rate, 0.30. Right, so not doubtful, not standard. The substandard category rate is provision rate should be used. Provision should be made at 10%. Okay. PFS Bank was engaged in the business of providing portfolio management services to its customers, for which it took prior approval from RBI. Your firm has been appointed as the statutory auditor of the bank's financial statements for 18-19. Your senior has instructed you to verify the transactions of the portfolio management services. While verifying the transactions, you notice that the bank has not prepared separate record for PMS transactions from the bank's own investments. They have to be shown separately, the portfolio which you are managing on behalf of the client and the bank's own investment. As a statutory auditor, what will be your decision for verification of PMS transaction? So wonderful variety of questions being asked. It is not necessary to maintain separate records for PMS clients from bank's own investment, so the auditor can verify the PMS transaction as part of investment verification for bank's financial statements and submit the audit report accordingly. 100% wrong. As per RBI guidelines, PMS investments need to be audited separately by the external auditors, and the auditors are required to give a certificate separately for the same. Right, in the list of certificates and reports to be issued by the statutory auditor of the bank, one of the certificate is also on the PMS. So in the above case, the auditor should not verify the PMS transaction till the bank segregates the transaction from the own investments. The auditor can give a qualified opinion in his audit report on the financial statements of the bank and report the matter in the special purpose certificate. Auditor should verify that PMS funds are not utilized for lending, interbank deposits or deposits to corporate bodies and bills rediscounting only. So whether the PMS transactions are recorded separately or not will not matter for the auditor. It is going to matter to the auditor. He can give qualified report? No. Right. So as per the RBI guidelines, right. So the correct option over here is B. Right, in PMS investments need to be audited separately by the external auditor, and the auditors are required to give a certificate separately for the same. So in the above case, the auditor should not verify the transactions till the time they have not been segregated by the bank. Right, yes, seventh one. The auditor should ensure that the board of directors of the top 100 listed entities shall comprise of, right, top 100 listed entities. What does it say? With effect from 1st April 2019 and with effect from 1st April 2020. Right, top 100 listed entities, not less than 6 directors. Right, so again a factual information. Right, not less than 6 directors. Right, not less than the 6 directors. Okay, right, mandatory now in the SEBI LODR. Next one, 50-50 test determination is popularly used in banking company, insurance company, NBFC, stock trading company. Right, if you remember clause 16 of CARO, which is regarding registration with RBI, right, it says whether a company is required to be registered under 45IA of the RBI Act, and if yes, whether the registration has been obtained. And when is a bank required to be registered? Right, what do we say? One, you need to look into the activities. Second one, at least 50% of the income is income from financial assets, and at least 50% of the assets are financial assets. And then you also need to check the net owned fund requirement. Right, so 50-50, at least 50% income and 50% asset, that we check for an NBFC, that is the non-banking financial company. Ninth one, CA Samir, after developing the audit strategy for Menka, develops an audit plan but finds a need to revise the materiality level set earlier, and therefore a deviation from the already set audit strategy is felt necessary. Right, so he wants to revise materiality, so correspondingly the strategy and the plan will also change. In this case, he should continue with the audit plan without considering the audit strategy. No, they both are interconnected. Right, they both are interconnected. Drop the audit and withdraw from the engagement. Oh my God, what is this? Drop the audit without any reason. Right, just because audit materiality revised, drop the audit. No, they just have to create the 4 options. First, modify the audit strategy and thereafter prepare the audit plan according to the modified strategy, and devise a new audit plan and then change the strategy as per the revised plan. No, first you need to change the strategy. Right, so first modify the audit strategy and thereafter prepare the audit plan according to the modified strategy. So the correct option is C. An auditor's expert may either be an auditor's internal or an external expert. Yes, we say auditor's internal expert, auditor's external expert. Internal expert within the team, within the firm. Which of the following cannot be an auditor's internal expert? Right, so expert, we say it could be management's expert, auditor's expert, auditor's expert, auditor's internal expert, external expert. Further, internal expert could be within the team or within the firm. So now they are saying which of them will not be an auditor's internal expert. Partner of the audit firm, obviously it's an internal within the firm, right? Partner of the audit firm. Temporary staff of the audit firm, so again within the firm. Permanent staff of auditors network firm, so again within the firm. So for the first 3, what answer do I get? They are all within the firm. Right, a prospective CA soon to join the audit firm as a partner. No. This cannot be considered to be an auditor's internal expert. It has to be within the firm. Okay, right, so that covers the first 10, which are the direct MCQs as such, and now we come to the case study based MCQs, right? 11th one. The Chanakya Bank Limited was having 150 branches all over India by 2019. 10 branches of the bank were already covered for concurrent audit, and the bank's audit committee decided to include the below mentioned branches for concurrent audit from the year 1920. Allahabad branch, which started foreign exchange business from February 19, and Rai Bareli branch, whose aggregate deposits were more than 35% of the aggregate deposits of the bank. Right, whether the decision of the audit committee to include both the branches mentioned in the above paragraph for concurrent audit is as per the RBI guideline. Right, the decision of the audit committee is valid as according to RBI guideline, both the branches fulfill the criteria for compulsory concurrent audit. Allahabad branch falls under the compulsory audit criteria as per the RBI guideline. However, Rai Bareli branch, whose aggregate deposits are less than 50% of the aggregate deposits, is not required to be compulsorily covered for concurrent audit. Allahabad and Rai Bareli branch are compulsorily not required to be covered under concurrent audit as per RBI guideline. So A says are to be covered, C says not to be covered. And D, Allahabad branch has started foreign exchange business in February, and as per RBI guideline, only the branches dealing in foreign exchange for more than 3 years are required to are covered under concurrent audit. Therefore, Allahabad branch is not covered under compulsory concurrent audit criteria as per RBI guideline, but the Rai Bareli branch is covered under compulsory concurrent audit guideline, audit criteria. Right? So A and C, no. Now B says Allahabad yes, Rai Bareli no. D says what? Allahabad no and Rai Bareli yes. Right, so which is the correct option over here? B is the correct option. Why? Because the moment a branch of a bank enters into foreign exchange transaction, foreign exchange business, concurrent audit applicable. And for the based on deposits, it's only if the deposits are more than 50% of the aggregate deposits. Here it is only 35%. Next one. KIC Limited is a company engaged in the business of general insurance and has been in existence for 15 years. The company has a subsidiary company, PIC Limited, which is also engaged in the business of insurance other than general insurance. The previous auditors of PIC have completed their tenure as an auditor and accordingly have resigned, and the management of PIC is looking for new statutory auditor. KB and Associates, a firm of CAs, have vast experience of audit of insurance companies and would like to get appointed as an auditor of PIC Limited. KB and Associates is a large firm and have also employed experts, engineers, valuers, lawyers for various client services. The firm is evaluating as to what should be the criteria for get appointed as an auditor of PIC, because in the past they have audited only the holding companies and considering a subsidiary company for the first time. In this context, please help the firm by answering which of the following options would be correct. Right, so now here we need to look into the appointment of the auditors. Right, appointment of the auditors in case of the insurance companies. What does it say? In case of the life insurance companies and in case of the general insurance company, not more than 2 life, not more than 2 general, and an overall limit of 3. Right, considering an overall limit of 3. Right, so KB and Associates, a firm of CA, should be appointed by the board of directors of PIC and should ensure they don't take up the audit of more than 2 insurance company. No, the blanket limit is for 3. KB and Associates can take up the audit if the firm is appointed by CNAG and should ensure that they don't take up audit of more than 3 insurance company. KB and Associates cannot take audit of PIC because they have employed experts, which is not permitted as per IRDAI guidelines. And KB and Associates can take up the audit of PIC by ensuring that they are eligible to be appointed as per the criteria laid down in the Companies Act for audit of subsidiary company, and they would need to submit a certificate in respect of this to the ICAI. My God, where ICAI has come into picture? Right, appointed experts, so no. Right, so what did I say? What is the overall limit? 3 insurance company, not more than 2 life, not more than 2 general, with an overall limit of 3 insurance companies for 1 CA firm. Unnecessarily in the question they've added the holding and subsidiary thing. Okay, 13th one. KJ Private Limited has a business of pharmaceuticals and has an annual turnover of 1500 crore. Pay attention. During the last few years, considering the environment in which the company operates, its profit has reduced and is still falling. Hence, the management has been looking at various ways to cut the costs. AD and Associates are the statutory auditors of the company and RM and Associates are the internal auditors of the company. Initially, the company did not want to appoint any internal auditors to save cost. However, at insistence of the statutory auditor, the company appointed internal auditor. During the course of statutory audit for 2019, the statutory auditor requested for detailed working papers of the internal auditor, to which the internal auditor refused. However, the statutory auditors told the management if the same are not provided, then they would qualify their report. In this situation, please advise which of the following would be correct. Immediately coming into your mind that no, right, internal auditor working paper property of the internal auditor, right, it is his own property. He did not give access to his working papers to the statutory auditor. The statutory auditor should review the detailed working papers, but they cannot qualify their report on this ground. No, they should not review. There is no such concept of reviewing the working papers of internal auditor. Right. The statutory auditor may review the detailed working paper and even after that they may qualify their report. No, they are behind the life. You review work paper of internal auditor. The statutory auditors are not required to go to the extent of review of detailed working papers of the internal auditor. Seems sensible. The statutory auditors may review the detailed working papers of internal auditor, but for that purpose they would require prior approval of the ICAI. Safed Jhoot. You understand now why ICAI, someone they have to put point number D, no. Right, so the statutory auditors are not required to go to the extent of review of detailed working papers of the internal auditor. No need to review the detailed working papers of internal auditor by statutory auditor. 14. Employees of LIG have to travel frequently for business purpose, so the company entered into a contract with Simon Travels for managing booking, cancellation and other services required by their employees. As per the contract terms, Simon Travels has to raise its monthly bills for the tickets booked or cancelled during the period, and the same are paid by LIG within 15 days of the bill date. The bills raised by Simon Travels were of huge amount, so the management of LIG decided to get an audit conducted of the process followed for booking cancellation of tickets and verify the accuracy of bills raised by the travel agency. Maybe coming to your mind, service organization, they are using the work of a travel agency. Which audit do you feel the management should opt for? Then you read this, then you say, no, this is something else. Which audit they are asking? Okay, internal audit as it relates to examine the operational efficiency of the organization. Management audit as it is an audit desired by the management. Performance audits was to assess the performance of Simon Travels appointed by the organization. Operational audit as it is the audit for the management and involves verifying the effectiveness, efficiency and economy of operations done by Simon Travels for the organization. So when you read the options, you come to know, oh, the question is from the chapter of internal audit, management and operational audit. Right, so obviously we want to check the operational efficiency of the controls at Simon Travels. Right, so D is going to be the correct option. Right, no internal audit, no management audit, no performance audit. What is required, desired is an operational audit. 15. Right, Zari and Associates is a partnership firm. What are you looking at? How much time is over? How much remaining? Okay. Right, Zari and Associates is a partnership firm and has been in existence for last 15 years. The firm is engaged in consultancy business related to various areas and has built a good name for itself over the period. Some of the clients of the firm are very old and who have been continuing since its existence. The business of the firm has gone through various phases. Some of them were very bad. But currently the business is going very well and the firm is looking to expand its operations into different geographies. So much story. For this, the firm's management decided that some of its senior partners will move to new offices and new partners would be included. A team of new partners is in discussion with the senior old partners regarding their joining the firm. The new partners would be interested to know whether the terms offered to them are reasonable. Okay, having regard to the nature of business, profit record, capital distribution, personal capacity of the existing partner, socio-economic setting, etc., and whether they would be able to derive continuing benefits in the shape of return of capital to be contributed and remuneration of services to be offered. In addition, they also want to ascertain whether the capital to be contributed by them would be safe and applied usefully or not. For this purpose, an investigation of the business of the firm was set up on behalf of these new partners. So, chapter of investigation, due diligence, forensic audit, investigation on behalf of an incoming partner. Whether their capital contribution would be safe and whether the terms offered are reasonable. Okay, at the time of scrutiny of the record, now this is a case study MCQ. Look at the size. Okay. At this time of scrutiny of the record of profitability of the firm's business, the investigating accountant picked up records for last 4 to 5 years, wherein he observed 2 years which were unusual because the profits during those 2 years were highly erratic and fluctuating. The investigating accountant therefore went into the profit of last 7-8 years to iron out the fluctuation. He also examined the provisions of the partnership deed, particularly the composition of partners, their capital contribution, drawing right, retirement benefit and goodwill. He also asked the details of the job contract in hand and the range of current clientele of the firm for his examination. Just so lucky, no? If in the theory part of the paper a question is asked on investigation on behalf of an incoming partner, you can take all points from here. Right. Some of these procedures of the investigating accountant were not found appropriate by the senior partners of the firm, and they advised that the investigating accountant not to go beyond his scope. In the given situation, which of the following is correct? Okay, now 4 options yet to be read. The investigating accountant should not have asked for the records of the profit of last 7-8 years, as that would be too much of the information for his review. Also, the details of job contracts in hand and the range of current clientele of the firm are confidential and hence does not get covered in his scope. Absolutely wrong. After finding 2 years which were unusual because the profits during those 2 years were highly erratic and fluctuating, the investigating accountant should have reported the matter to the new partner instead of asking detail for 7-8 years. Also, he is not right and is not required to examine the provisions of the partnership deed, as these details would have already been discussed with the new partners and they would have checked that. Wrong. Right. The procedures of the investigating accountant looks completely reasonable considering his scope of work. Further, no changes are required in his approach. Okay. D. At the outset, it can be said that the investigation in the given case was not required. But we'll read the entire thing. However, even if the new partners decided to carry out the investigation, it should have been limited to mainly inquiry procedures by the investigating accountant. The investigating accountant could also have reviewed the manner of computation of goodwill, which doesn't seem to have been performed on the basis of the above mentioned facts, right? So, investigation only not required. No, yes, C is the correct option. The procedure seems to be completely reasonable considering the scope of the work. 16. While conducting the current year audit of Finco Limited, the auditor obtains audit evidence that a material misstatement exists in the prior period financial statement. So, SA 710, comparative information. The auditor obtains audit evidence that material misstatement exists in the prior period financial statements. This misstatement was related to recognition of R&D expenditure. The provision of Ind AS 38 relating to capitalization of development expenditure was not applied properly. On this, unmodified opinion had been previously issued. So last year there was a misstatement. Was it reported last year? No, it was not reported last year. Unmodified opinion issued. The current auditor verified that this misstatement had not been dealt with as per Ind AS 8. Right? The current auditor will. Right, so we SA 710, when we talk about the reporting, we say last year there was a misstatement. Was it reported? Yes. Then whether it has been resolved? Not resolved. If resolved, no reporting. Not resolved, modify current report. Second one, last year there was a misstatement. Was it reported? No. Then modify current opinion with respect to corresponding figures. And third and fourth option, prior period audited by predecessor auditor and prior period unaudited, other matter paragraph. Right, so last year there was a misstatement. Was it reported? No. So what will you do? Current year, what you will say? Modify your opinion for the current year with respect to the corresponding figure, because in the corresponding figure there is a misstatement, but my opinion is only for the current period. Right. Express a qualified or an adverse opinion in the audit report on the current period financial statements with respect to the corresponding figures included therein. Right, so modify current opinion with respect to the corresponding figures. Right, express an unmodified opinion in the audit report on the current period since it was related to prior period. No. Express a qualified opinion in the audit report on the current period modified with respect to the corresponding figures included therein. Right, why only qualified? It could be qualified or adverse. Express an adverse opinion. No, it could be qualified or adverse. Right, so with respect to the corresponding figures. Okay, 17. Honeywell Limited, a listed company, pay its key managerial personnel the remuneration in excess of the limits which have been prescribed under Section 197 of the Companies Act without obtaining the necessary approvals from the regulatory authority. In this circumstance, the auditor, while reporting under CARO, is required to state, right? So clause, yes, 11 of CARO, managerial remuneration, where the managerial remuneration has been paid or provided for in accordance with the requisite approvals mandated under Section 197 read with Schedule 5. If not, state the amount involved and the steps taken by the company for securing the refund of the same. What are they saying? As per CARO, the auditor is required to state name of the managerial personnel to whom the excess remuneration has been paid and the amount involved. Then name of the managerial personnel to whom the excess remuneration has been paid and steps taken by the company for securing refund of the same. The maximum remuneration payable and amount paid in excess of the maximum remuneration to the managerial personnel, the amount involved and the steps taken by the company for securing refund of the same. Right? What did I tell you? What is the reporting if excess managerial remuneration is paid? No name of KMP. What does it say? The amount involved and the steps taken by the company for securing refund of the same. 18. You are the audit senior in charge of the audit of Swan Dive Company and have been informed by your audit manager that during the current year a fraud occurred at the client. A payroll clerk sets up fictitious employees and the wages were paid into the clerk's own bank account. This clerk has subsequently left the company, but the audit manager is concerned that additional frauds have taken place in wages department. Which of the following audit procedure would be undertaken during the audit of the wages as a result of the manager's assessment of the increased risk of fraud? Discuss with the payroll manager the nature of the fraud, how it occurred, the financial impact of the amount incorrectly paid into the payroll clerk's bank account. Review the supporting documentation to confirm the total of the fraudulent payments made and assess the materiality of this misstatement. Review and test the internal controls surrounding setting up and payments of new joiners to assess whether further frauds may have occurred. And review the legal action taken by the management against the payroll clerk who was involved in the fraud and see whether he is punished for his actions. So as an auditor of the company, what are the points you will look into? Discuss with the payroll manager, review the supporting documentation, review and test the internal control. You don't need to look into what is the legal action. That is later part. That is only the later correct whatever actions have been taken. Right, so audit procedure 1, 2, 3, 2, 3, 4, 1, 3, 4, 1, 2, 4. Right, so which is the correct option in this case? A, audit procedure 1, 2 and 3. Okay, 19. One of your audit client, Vernon Company, with the year ended 19, is planning to prepare financial statements from the next year as per Ind AS. The finance director of Vernon, right, has contacted the audit engagement partner asking if your firm can provide training on Ind AS to the accounts department of the entity. This will help them to understand all the provisions of Ind AS and the transition process will be easier. Which of the following option needs to be considered by the audit engagement partner? Right, what is the finance director has contacted the audit engagement partner asking if your firm can provide training on Ind AS to the accounts department of the company. Now, providing training, I think, it's certainly not covered in the list of section 144 audit or not to render certain services. And there we have those 9, accounting, bookkeeping, internal audit, design and implementation of financial information system, outsourced financial services, actuarial services, management services, investment advisory services, investment banking services, and any other kind of service. Training service is not over there. Right. Which of the following option needs to be considered by the audit engagement partner? The issue is whether there is a self-interest threat as the auditor will receive separate training fee for the service provided. The audit partner should decline the training assignment. He says, no, I can't give training. The issue is whether the audit firm would be likely to possess the competence to provide such training to the staff of the entity. The audit partner should decline. Not all the qualified people are good trainers. Story. Right, not all qualified people are good trainers. No, the audit partner could go ahead with the training service and disclose the fact in its audit report about the service provided during the period. This will safeguard and reduce the threat to an acceptable level. Hats off to the people who set the MCQ. Right. The audit partner needs to assess the materiality of the figure, the fees, this degree of subjectivity involved. If it considers that safeguards like using separate personnel could reduce the threat to an acceptable level, then it can go ahead with both the audit and the training assignment. Right. So A and D, had D been some more weird option, then we could have gone for A. But because D is a more sensible option, right, we delete A and we finalize the option as D. Right, the audit partner needs to assess materiality, degree of subjectivity. Separate personnel could reduce the threat to an acceptable level and do both the audit and the training assignment. Okay. Self-interest comes when you are providing those 144 services, right? The auditor not to render certain services, right? Self-interest, self-review threats. And the last one, AG Private Limited, last one, no? AJ Private Limited was incorporated on 21st of March 2018 and has limited operations. However, the capital induction in the company was huge because it would be capital intensive. The company is in the process to set up a new plant in Karnataka, which should be completed by 31st May 2019. The company's management prepared its financial statements for 2019. The auditors were also called to start in the work in April 2019. The auditors would be able to complete their work by 31st of May and accordingly would issue their audit report by first week of June 2019 as per the plan agreed with the management. The auditor has some observations relating to preparation of financial statements which are not in compliance with Schedule 3. And most importantly, the point relating to the capitalization of plant as property, plant and equipment in the financial statements for 2019. Please suggest which of the following statements would be correct. What does it say? Would be completed by 31st of May. So as on 31st of March, it is work in progress, capital work in progress. The compliance of Schedule 3 shall start from 1st April for this company as per Company Account Amendment Rules 2016. The compliance of Schedule 3 will start from first financial period. However, some exemptions would be applicable as per Company Accounts Rule 2014. There should be full compliance of Schedule 3 and plant should be kept as CWIP as per Schedule 3. There should be full compliance of Schedule 3 and plant should be shown as PPE as per the schedule. How can you show it as PPE? Right, it is still capital work in progress, right? So there should be full capital compliance of Schedule 3, so entire Schedule 3 applicable and should be kept as CWIP as per Schedule 3, right? So C is the correct option, right? So that completes the 20 MCQs in the mock test paper of October 19, right? Thank you very much.